Hi, this is Juliet Orfiano. Welcome to my video. This is the continuation of part 1 about operations, dividends, book value per share, and earnings per share. The topics that I discussed in part 1 are as follows. First, accounting cycle of a corporation. Second, preparation of worksheet. Third, preparation of financial statements. Fourth, statement of financial position or balance sheet. Fifth, statement of recognized income and expense or income statement. Sixth, statement of changes in shareholders' equity. 7. Preparation of adjusting and closing entries. Just click above or the link below this video so that you can watch part 1. Don't forget to like, share, and subscribe to my channel so that I can notify you when I have a new video. The topic that I'm going to discuss in this video is about dividends. Dividends are distribution to shareholders of corporate earnings in proportion to the number of shares held by them. Distributions may take the form of first, cash, second, non-cash assets, third, notes or other evidence of corporate indebtedness, and fourth, shares of the company's own stock. Dividends, previously described, are paid out of accumulated earnings of the corporation. Dividends may also be paid as a return of shareholders' invested capital. This type of dividends are called liquidation dividend. However, the discussion will be limited to dividends representing distributions of corporate earnings. The power to declare dividends is vested upon the board of directors, although they have to observe legal requirements governing the maintenance of legal or stated capital. Dividend declaration is normally announced to be made known to the shareholders. The following dates are essential in formal dividend announcement or statement. First, date of declaration. The date of declaration is the date when the board of directors approve the resolution to distribute dividends. The liability to shareholders is recorded on this date. Second, date of shareholders record. This is the date when the company determines the shareholders who are entitled to the receipt of declared dividends. No entry is required on this date. However, a list of registered shareholders is made as of the close of business on this date. Share capital are selling dividends on prior to this date and are selling ex-dividends the day following this date. Number 3, date of payment or distribution. This is the date when dividends declared are paid or distributed to shareholders. The liability recognized on the date of declaration is cancelled or extinguished to this date. Cash dividends. Cash dividends are dividends that are distributable in the form of cash. This is the most common type of dividend. The following entries are made to record the declaration and subsequent payment. Debit retained earnings, credit cash dividends payable. To record the declaration of dividends. Debit cash dividends payable, credit cash. Alternatively, the account dividends payable may be used. If the dividends declared are still unpaid as of the statement of financial position date, the balance of the account cash dividends payable is reported as a current liability. The amount of cash dividends declared should not exceed the amount of cash reported on the statement of financial position or cash needed for current operations. For instance, retained earnings may have a balance of 1 million but the cash balance is only 500,000. The corporation can distribute cash dividends of not more than 500,000 pesos. Another form of dividend may be declared for the remaining undistributed earnings. Cash dividends may either be, first, peso dividend. Peso dividend is a cash dividend expressed in peso amount. The peso dividend multiplied by the number of outstanding shares of the corporation equals the total amount of retained earnings declared as cash dividends. On the other hand, the peso dividend multiplied by the number of capital shares held by a shareholder equals the total amount of cash dividends to be received by the shareholder. Second, percentage dividend, a cash dividends expressed in percentage. The dividend percentage multiplied by the par value or stated value of the capital share equals the peso dividend. Alternatively, the percentage dividend multiplied by the total par value or total stated value of the capital share equals the total amount of retained earnings declared as cash dividends. For example, the dividend on a 10% preference share with a par value of 100 pesos is equals to 10 pesos or 10% of 100 pesos. A shareholder who owns 2,000 shares is entitled to 20,000 pesos or 10 pesos times 2,000 shares. Illustrative problem B. Fortune Corporation has 10,000 shares of 100 pesos par value ordinary share capital outstanding as of December 1st, 2008. On this date, the Board of Directors declared a cash dividend of 10 pesos per share to shareholders of record of December 30, 2008, payable on January 15, 2009. 2008 December 31st, debit retained earnings for 100,000 pesos, credit dividends payable for 100,000 pesos. 10,000 shares at 10 pesos is equals to 100,000 pesos. 2009 January 1st, debit dividends payable for 100,000 pesos and credit cash for 100,000 pesos. The dividends payable account will be reported in the December 31st, 2008 Statement of Financial Position as a current liability. Scrip Dividends. Scrip dividends are in fact deferred cash dividends. A scrip dividend is declared when the corporation has sufficient retained earning balance but not sufficient funds at that time for a cash dividend. Scrip dividends consist of a written promise to pay certain amounts at some future date. The payment normally includes the principal amount and an interest at a specified date. The entries to record the declaration and subsequent payment of scrip dividends is as follows. Debit retained earnings, credit scrip dividends payable. To record the declaration of dividends. Debit scrip dividends payable, debit interest expense, and credit cash. The entries to record the declaration of dividends, the accrual of interest at year-end, the reversing entry at the beginning of the new accounting period, and the payment to shareholders are as follows. 2008 October 31st, debit retained earnings for 100,000 pesos, credit scrip dividends payable for 100,000 pesos. 10,000 shares at 10 pesos is equals to 100,000 pesos. December 31st, debit interest expense for 1,000 pesos, credit interest payable for 1,000 pesos. 100,000 pesos times 12% times 1 over 12 is equals to 1,000 pesos. 2009 January 1st, debit interest payable for 1,000 pesos, credit interest expense for 1,000 pesos. March 31st, debit scrip dividends payable for 100,000 pesos, debit interest expense for 4,000 pesos, and credit cash for 104,000 pesos. 100,000 pesos times 12% times 4 over 12 is equals to 4,000 pesos. The accounts Scrip Dividends payable and interest payable will be reported in December 31st, 2008. Statement of financial position as current liabilities. Property dividends. Dividends distributable in the form of non-cash assets are known as property dividend. This type of dividend reduces retained earnings by the cost of carrying value of the property on the date of declaration. Property distributed normally takes the form of assets that can be easily divided or allocated among shareholders, such as stocks of other companies owned by the corporation. The entries to record the declaration and subsequent distribution of dividends is as follows. Debit retained earnings, credit property dividends payable. To record the declaration of dividends. Debit property dividends payable, credit asset. To record distribution of property dividend. Retained earning is debited for the cost or carrying value of the property, and no gain or loss is recognized by the corporation from the distribution of property dividend. Illustrative problem D. Fortune Corporation has 10,000 shares of 100 pesos par value ordinary share capital outstanding as of December 1st, 2008. On this date, the Board of Directors declared a property dividends distributable to shareholders of record on December 30, 2008 payable on January 15, 2009. The corporation will distribute 5 shares of Lucky Corporation for every share of Fortune Corporation owned by the shareholders. Each share of Lucky Corporation has a carrying value of 10 pesos on the date of declaration. The entries to record the declaration and distribution of property dividend is as follows. 2008, December 1st. Debit retained earnings for 500,000 pesos, credit property dividends payable for 500,000 pesos. 10,000 shares times 5 at 10 pesos is equals to 500,000 pesos. 2009, January 15. Debit property dividends payable for 500,000 pesos, credit investment in Lucky Corporation stocks for 500,000 pesos. It should be noted that the declaration and payment or distribution of cash dividends, scrip dividends, and property dividends do not affect the corporation's number of capital shares issued and outstanding. This means that the total number of capital shares issued and outstanding before the dividend declaration and payment or distribution shall be the same as total number of capital shares issued and outstanding after the dividend declaration and payment or distribution. However, there is a decrease in the total assets and the total retained earnings. Share capital dividends or stock dividends. A share capital dividends or stock dividend is a distribution to shareholders in the form of corporation's own share capital or stock. Thus, when Fortune Corporation distributes Fortune Corporation shares to its shareholders, it is distributing share capital or stock dividends. This type of dividends does not affect total assets and total shareholders' equity. Rather, it simply represents transfer of capital from retained earnings to contributed capital. Hence, total shareholders' equity before and after the declaration and distribution of stock dividends are the same. On the other hand, retained earnings is decreased, while contributed capital is increased as a result of the declaration and distribution of stock dividends. Recording the declaration of a stock dividend, a distinction should be made between a small and large stock dividend. A stock dividend representing less than 20% of the outstanding shares is considered a small stock dividend. A stock dividend representing 20% or more of the outstanding shares is considered a large stock dividend. Under a small stock dividend, retained earnings is debited for the fair market value of the share capital on the date of declaration. Under a large stock dividend, retained earnings is debited for the par or stated value of the share capital. The entries to record the declaration and distribution of stock dividend, both large, is as follows. Small share capital dividend, debit retained earnings, credit shares capital dividends distributable, credit paid-in capital from share capital dividends to record the declaration of dividend, debit share capital dividends distributable, and credit share capital or unissued share capital to record the distribution of stock dividends. For large stock dividend, debit retained earnings, credit share capital dividends distributable to record the declaration of dividends, debit share capital dividends distributable, credit share capital or unissued share capital to record the distribution of stock dividends. The account share capital or stock dividends distributable is credited for the par or stated value of the shares to be distributed regardless of whether the stock dividend is small or large. This account is reported on the statement of financial position under the shareholders' equity section as part of contributed capital. It is properly shown as an addition to the share capital outstanding. The account paid-in capital from share capital dividend is credited for the excess of the fair market value of the share over its par or stated value. This account is reported on the statement of financial position under the shareholders' equity section as part of additional paid-in capital. Illustrative Problem E. Fortune Corporation has 10,000 shares of 100 pesos par value ordinary share capital outstanding as of December 1st, 2008. On this date, the Board of Directors declared a stock dividend distributable to shareholders of record of December 30, 2008 payable on January 15, 2009. The fair market value of Fortune Corporation stock on December 1st is 105 pesos. On December 30 is 110 pesos. On January 15 is 106 pesos. The entries to record the declaration and distribution of stock dividends using two independent cases are as follows. Case number 1. A share capital dividend of 10% was declared. 2008, December 1st, debit retained earnings for 105,000 pesos, credit share capital dividends distributable for 100,000 pesos, credit paid-in capital from stock dividends, 5,000 pesos. 10,000 shares times 10% at 105 pesos is equals to 105,000 pesos. 10,000 shares times 10% at 100 pesos is equals to 100,000 pesos. 10,000 shares times 10% at 5 pesos is equals to 5,000 pesos. 2009, January 15. Debit share capital dividends distributable for 100,000 pesos. Credit ordinary share capital for 100,000 pesos. Case number 2. A share capital dividends of 30% was declared. 2008, December 1st. Debit retained earnings for 300,000 pesos, credit share capital dividends distributable for 300,000 pesos. 10,000 shares times 30% at 100 pesos is equals to 300,000 pesos. 2009 January 15, debit share capital dividends distributable for 300,000 pesos and credit ordinary share capital for 300,000 pesos. The declaration and distribution of share capital dividends, whether small or large, increases the number of capital shares outstanding. In all of the different type of dividends discussed, it should be noted that only the outstanding capital shares are entitled to dividends. Thank you for watching my video. I hope you like it and learned something from this video. I did part 3 and continuation of this video. I discussed in part 3 about dividends on preference shares. Just click above or the link below this video to watch part 3. Don't forget to like, share, and subscribe on my channel so that I can notify you when I have a new video. Once again, this is Juliet Orfiano. See you on my next video.